Welcome to AI TV News. The United States has struck an unprecedented deal to take a direct cut of AI chip sales to China. From now on, Nvidia and AMD must share part of their Chinese revenue with Washington. In the next 4 minutes, we'll explain what the deal looks like, why it exists, and what it could mean for tech and geopolitics. Here's the core arrangement. The Trump administration has granted Nvidia and AMD special licenses to resume shipping 2 chips tailored for China, Nvidia's H20 and AMD's MI308. In exchange, the companies will hand over 15% of the revenue generated by those sales. This payment isn't a formal tax, it's a negotiated condition attached to the export licenses, the first time a U.S. firm has accepted such a trade-off. Why now? For years, Washington limited exports of high-end AI chips, warning they might bolster China's military and surveillance programs. Nvidia responded by designing the slightly weaker H20 to stay within the rules, but even that chip was banned in April 2025. After heavy lobbying, including a face-to-face meeting between Nvidia CEO Jensen Huang and President Donald Trump, the administration reversed course in July and offered the new licenses with the revenue-sharing clause attached. The White House presents the deal as a way to capture value from any relaxation of export controls. Although officials haven't said how the money will be used, reports suggest it could fund domestic chip research and technology security. For Nvidia and AMD, giving up 15% is the price of re-entering a market that once generated billions of dollars every quarter.
Not everyone is applauding. Trade lawyers call the arrangement unprecedented and dangerous, arguing that export controls are meant to protect national security, not raise revenue. Some constitutional scholars add that the U.S. Constitution bars taxes on exports, raising the question of whether a mandatory revenue share is simply a tax by another name. Critics also note the logical gap. If the chips are genuinely a security threat, does charging a fee eliminate that threat?
The financial stakes are huge. If sales rebound to past levels, Washington could collect more than $1 billion per quarter from Nvidia alone. China's response will be pivotal. Beijing might view the deal as a protection racket and speed up development of homegrown chips, eroding U.S. influence in the long run. Meanwhile, other industries eyeing restricted markets are watching closely. Today's pay-to-play model could become tomorrow's template. Key questions remain. How will the government track and collect the revenue? Will future administrations honor or revoke the licenses? And will China accept the arrangement or retaliate with its own barriers? For now, one thing is certain. The line between national security policy and commercial negotiation just got blurrier. Whether this deal represents smart leverage or a risky precedent, its ripple effects on global tech, trade, and politics are only beginning to unfold.